Hey guys, Bob Iacchino. I'm just getting home from the workday. Disney just released earnings, and I promised you guys an update on how we did the Disney trade and why we did the Disney trade. Disney is up quite a bit after they released earnings. Let me get on my computer and I'll put that together for you. Okay, so I promised you guys this video. Here we are on MarketWatch.com, and here is the story about Disney shares rising 5% on a jump in revenue. Let's just kind of scroll down to the story here. Shares of the Walt Disney Company gained 5% in after-hours trading as it reported quarterly results roughly in line with Wall Street's estimate days before its much-anticipated live streaming service begins. But it is jumping, as you can see, 5.6% at whatever time I pulled this story up. And that's mainly because of this revenue jump. Disney reported $1.07 a share. You can see down here in the bottom of the story, FactSet expected Disney to report adjusted fiscal fourth quarter earnings of 94 cents a share. So we got a beat on EPS. And then this revenue rise, 34% from 19 to 19.1 from 14.3. This is a huge revenue jump right here. That's massive. So the stock is obviously rising. And in our live stream on October 18th, I recommended and also did buy Disney shares live on our October 18th live stream. And I want to point out the technical reason why I did that. If you watch the live stream replay, which you can find on our Pure Exposure YouTube, or you go to Pure Exposure growthseries.com, and it's on there as well. That's Pure Exposure with one E. You can watch the live stream, and I talked about the fundamental case for it. Tony Zhang actually wanted to be short Disney, but his trade also worked. So there were two ways to look at it, and both trades actually worked, and that can happen. But let me go to the chart and show you what I mean by all of that. Okay, so here's the Disney chart. Here is, let's find the exact date. This is October 18th right here, okay? This particular down candle. Now, in fairness, we bought at around the open because we went live on October 18th at the market open, right? And it collapsed, and we bought some more down in here. Now, let me show you the pattern that we were looking at. Again, I talked about the fundamental case for Disney, and that you could watch the replay and see what I was talking about with the fundamental case. And it was interesting that that story said that it beat on earnings prior to the much anticipated live stream starting, which I'm going to be a subscriber to. But let me go ahead and show you that on the day of the live stream, the chart looked a little something like this. Here was the way it looked, okay? Now, if I point out here, you'll see the 200-day moving average. And then here is one bottom, and here is another bottom, and here is the down move preceding the formation of these two bottoms. Those are three of the characteristics of a double bottom reversal pattern. You have a bottom, and then you have a second bottom, and you have a move that it would be reversing. Remember, double bottoms are reversal patterns. So the market is moving down, it makes a bottom, it makes a peak, it makes another bottom, and then potentially could spike up. Here we got a close above the peak of the formed double bottom. That's another characteristic. And then here is the subsequent up move that happened, right? Now let me go ahead and measure out the move. Right now, this does not have after hours in it. Currently, the close of this particular live trading day was 132.96. If we're talking about the stock being up about 5%, you look at, that's going to be off of the close, right? So if you look at 132.96, 5% of that takes us up about $6.60 or so, which would take us to about 139.60. So that's taking us all the way up here. Now keep that in mind. Let's just say 139, okay? Let's just put this particular market at around 139, which is about here. 139.07 is close enough. All right, now let me show you how we would measure out the target for this. Because in the video I did a couple days ago, I talked about us having reached the target already. Okay, so here is the peak of the double bottom. Here is the right-hand bottom of the double bottom. So what I'm going to do is I'm going to take an adjusted Fibonacci retracement extension, which we have replaced with Gann levels, all right? And I'm going to go ahead and do a quick adjustment on the levels that are showing here. Okay, so what I've done is I've added on Gann extensions for this particular pattern from this particular high right here, which is 131.57, to this particular right-hand low, which is 128.06. And I've extended that out 200%. Now, our initial target is the 175% extension. That's always our initial target for a double bottom. It would be the reverse and a double top. Now, there's other criterion, but I don't have time to go into that right now. There's other criterion that make something either a high probability double top or double bottom. Now, during the course of that, we put our stop below this particular level, 128.94. It has to close below it, all right? In the course of this entire move, there's never been a close below. Now, this is why I tell you that Tony Zhang's trade worked as well, because here was the day that we put the trade on, right? And Tony Zhang wanted to be involved in the put side of the options. And here's where all of his things, I believe he sold calls above. I think that's what he did, but I'm not sure. Again, you can watch the live stream and figure out what he did. But either way, the amount of time that he had it on, we entered here, went down 2 days in a row, jumped, and then went down again. He made money during these 2 down moves, okay? But now we were looking for the first target of 134.20. And right around here, you got to a high of 134.14. We call that close enough because we never exit our trades right at that level, but also the word target doesn't necessarily mean that we exit a trade. It just means that we either move our stop or we put on some puts against it to protect, whatever. What we did on this particular trade is after it reached up here, we moved our stop to below 129.82, which is the 50% retracement. It never got down there. It did move down again. And now, as I told you, the after hours is trading at about 139.07. We're likely to exit this trade on the open tomorrow. If you're in this trade and you want to hold it, that's perfectly fine. But now that the 200% extension is exceeded, we've reached the target of this pattern. It's no longer in the context of this pattern that you'd be holding this trade if you got in it with us. So that's exactly how we set this trade up. Again, there's a lot more criterion to what makes a high probability double. There was also the fundamental story that we talked about on the live stream. Again, you can watch it. The recording of that live stream is still up. Again, our website is pureexposuregrowthseries.com. You can find us there. And just remember, it's P-U-R-E exposure. There's no double E in there. So you can find it there. You can find it on our YouTube channel. Watch the replay. You'll hear the fundamental story. The technical trade has worked out. Everybody wins. Tony Zhang was right on his short-term options. We were right on our medium-term hold. That's what we love. That's what we like to see. I will see you guys in the next live stream. Remember, watch for the date of the next live stream. Right now, it looks like it's going to be beginning of December, but we'll have an exact date for you guys. Our sponsors have re-upped. Everybody's happy about what's going on, and we're happy about this Disney trade. Talk to you guys soon.